Welcome to the webinar for Vistas on managing student loans. Thanks so much to everyone who's joining us. And looking through the chat, it seems like we have a wide range of participants with us today. Some of you are even into your second year as a VISTA member or a leader, so thank you so much for continuing to do service with us. Others of you have been here for 11 months, so you're almost wrapping up your service. And some of you have been here for only 2 to 3 months, maybe 4. What you'll find today is that all of you will be able to benefit from the information in this webinar because student loans can be daunting to navigate. As a VISTA member, you have many options available for managing student loans both during and after service. This session outlines several options to postpone, repay, and reduce your federal loan payments. We'll also discuss programs unique to federal service that could eliminate your loan balances altogether. And a quick note, while we do discuss the Education Award during this webinar, for those of you who want more tips regarding the Ed Award specifically, we have another webinar coming up focused solely on the Education Award in January. Again, I'm Molly Pelzer, Training Coordinator for AmeriCorps Vista, and I'll be your host. I'm joined today by Jessica Knight and Andy Clark from Education Northwest. Together, we'll be providing online support during the presentation and also facilitating your questions. Now it's my pleasure to introduce today's presenters from the VISTA Member Support Unit who will be presenting about student loans. Siobhan is a native of Dallas, Texas, and is an AmeriCorps and AmeriCorps Vista alumna. She served as an AmeriCorps Vista member in Arlington, Texas, and Siobhan joined the VMSU staff in 2013. Calvin is from Waco, Texas. He served 2 terms with AmeriCorps NCCC as a field team leader and later as a support team leader on projects throughout the Midwest and Northeast regions of the U.S. Since wrapping up his NCCC service, Calvin has worked for CNCS, first at NCCC headquarters and currently with the VMSU. We are also joined by Taryn, who will be sharing some information about taxes. Taryn served with AmeriCorps NCCC in Class 10, the Sacramento Pacific region, and Class 11, the DC Capital region, as well as with AmeriCorps Vista in Boston. She is currently a program officer in the Pennsylvania State Office. Now I'm going to turn things over to Siobhan. Siobhan, welcome to the webinar.
Thanks, Molly. I just wanted to say it's great to be able to have this webinar today. As a former VISTA member, I can definitely attest that the information that will be shared today will definitely guide our VISTAs and alums on the right path to manage their student loans. To start off, we're going to start off by looking at some most common types of student loans. Then we will explore some specific programs to help members eliminate their student loans long term. At the end of the presentation, we will open up the conversation and take questions during the Q&A. So let's go ahead and jump right in. As a VISTA, there are 3 important factors to consider when thinking about student loans. First, the types of loans you will have will impact the programs that you're eligible for. Second, your decision to select either the Education Award or the stipend will impact some of your loan repayment options. Third, your future career plans will impact the possibility of having your loan balance forgiven long term. During the presentation, we will address all 3 of these factors. To start out, we'd love to know what type of student loans you all have. Please look on the right side of your screen and you'll see a poll pop up. Please take a moment to share with us what type of student loans you have, if you know what they are. The loan options include federal direct loans, federal Perkins loans, private loans, both federal and private. I don't know, and I don't have any loans for those people who are wonderful. So please go ahead and take a second to look at that and fill that out.
Yep. And even though it gives you a time limit of about 5 minutes, the sooner you guys get your answers in, the better, because then we'll be able to take a look at what types of loans you have or maybe don't have, and then we'll be able to continue with the presentation. So we'll give you just another couple minutes. And as Siobhan mentioned, your options are federal direct loans, which include subsidized, unsubsidized or plus, as well as federal Perkins loans, private loans, both federal and private, I don't know, and then the lucky I don't have any loans. So the poll has ended, and we will give just a minute for those results to pop up, and then we will talk through them. So just one more second, and there we go. So it looks like, Siobhan, the majority of people in the webinar today, 83 of you, have federal direct loans. The next most popular category is both federal and private loans. Then we have a few people that don't know, and we have a few people that have federal Perkins loans, private loans, and a couple that don't have any loans. Great. So we are going to touch on all of these topics for the most part, right, Siobhan?
Oh, yes.
Excellent.
Right. Thanks, Molly. All right, so many of the programs we will be talking about today will only apply to specific types of loans, so it's important to know which types of loans that you have. Let's start off by clarifying some key differences between student loan categories. Broadly, we will be talking about either federal or private loans. In the case of all federal loans, funds are borrowed from the federal government, and the most basic difference lies in who administers and distributes those funds. For federal direct loan programs, the lender is directly the U.S. Department of Education. Within this category of federal loans, there are several different programs, as you can see in the first column, including subsidized, unsubsidized, and Parent Plus. With federal Perkins loans, the lender is actually the school itself. While the government still provides and backs those funds, it is the schools and universities that administer the loan funds to the student. Finally, private loans are those borrowed and administered through private lending institutions. Some of these include loans from Discover, Sallie Mae, or loans administered by a bank or credit union. Throughout this presentation, please be mindful of which loans are eligible for a given program. Now let's talk about the options for postponing student loans during service. To start, we'd love to know how many of you have already put your loans into forbearance or deferment. Please take the time to answer the poll question located on the right side of your screen again. We definitely appreciate everyone's participation in completing this poll, and we're looking forward to reviewing and discussing the results. So we'd just like for you to take a few seconds and submit your answer, and so we can get an idea of whether your loans are in forbearance or deferment.
Yep. And I saw in the chat, Siobhan, earlier that some folks have already started talking about forbearance. I know we have some questions already about forbearance. So I know that'll be a popular option. But forbearance, deferment, no, I don't know, or I don't have any student loans currently. So again, we'll touch on all of these topics in just a couple more seconds, and then our poll will close, and we'll be able to get a pulse on what we have for our status for most of you. So it looks like responses should be coming in just a minute. And as soon as those pop up, we'll review them. And let's see. All right. So Siobhan, it looks like we have quite a few who have already put their loans into forbearance. Quite a few haven't taken any action yet, so I think it's great that they're with us on the webinar today and we can talk through what they should do. A number of folks have already worked on their deferment, and some don't know. One person doesn't currently have any student loans. And then we also have some who unfortunately didn't answer, but we'll be able to work through all of those options today.
Awesome. All right, thanks, Molly, for helping me out. All right, for those of you who selected the Education Award as your end-of-service benefit, you can put your federal student loans into a state of forbearance with the National Service Trust so that you don't have to make loan payments while you're serving as a VISTA. I'm going to refer to this as National Service Forbearance. Most federally backed student loans qualify for National Service Loan Forbearance. For example, federal direct loans and direct consolidation loans can be placed in National Service Forbearance. However, there are two exceptions to this. Parent Plus loans and federal Perkins loans are not eligible for National Service Forbearance. Private student loans also do not qualify for National Service Forbearance. Similarly, if you chose a stipend as your end-of-service benefit instead of the education award, you are also not eligible for forbearance. In both cases, you would want to explore loan deferment, and we will talk about this in the next few slides. The most immediate benefit of having your loans in forbearance is that you don't have to make loan payments. However, even in forbearance, your federal loans will continue to accrue interest. So another great benefit of National Service Forbearance is that once you complete your entire year of service, you can ask CNCS, which is the Corporation for National Community Service, to pay off the accrued interest. There are a few things to know about the interest accrual payment. First off, it does not happen automatically. You will need to submit a request on the MyAmeriCorps website to have the interest paid for you. The interest accrual payment is an additional benefit to the education award. This payment does not come out of your Ed Award balance. The interest accrual payment is considered taxable income, so you will need to report it as such and be prepared to pay the tax on the payment. We will come back to tax implications in a bit. Forbearance does have its limits, so let's review a few things you will want to keep in mind. National Service Forbearance is only an option if you chose the education award. Forbearance and interest accrual payment are contingent upon successful completion of your term of service. If you end service early, you will not only forfeit the education award, but also the forbearance and interest accrual payments. This means you will owe your lender for any interest that accumulated during your forbearance period. VISTA members who extend their service are not eligible to receive an education award during the extension period. During an extension, you are only eligible for the end-of-service cash stipend. Since the education award option is not available, requesting forbearance for existing loans and interest accrual are not available. Let's say you get to the end of your service and you decide to stay on for 3 more months to wrap up your project. For those 3 months, you're only eligible to receive the end-of-service stipend, which accrues at $125 a month. Once you enter this extension period, you are no longer in a period of National Service Forbearance, and your lender may begin to request repayment. Please remember, forbearance is not guaranteed. If you have not already done so and would like to put your federal loans into forbearance, you can find the request form on your MyAmeriCorps account, shown here. When filling out the request form, if your lender is not listed, click on Institution Not Found and follow the directions. You should expect to see in your account if your request was accepted by your lender within 3 to 5 business days. Now, while we're on this topic, this is also where you will request to have interest, the interest that accrued during that forbearance paid off after your service is complete. Typically, the interest accrual payment will also take 3 to 5 business days to process. Make sure you follow the process and timeline carefully so as to avoid fees or late payments. A request for forbearance can be made the old-fashioned way, through paper, but please be advised that it will take significantly longer to process. If for whatever reason you would like to fill out a paper request, please call the National Service Hotline directly and they can guide you through the process. Now let's take a moment to talk through a scenario. As we've mentioned, you can only put loans in forbearance if you've selected the education award. However, as a VISTA, you can earn only up to 2 education awards in your lifetime. So let's say that you love VISTA so much you want to serve a 3rd term. What are your options? If you opt for the cash stipend, which is shown in the first column, you would receive $1,500 at the end of service. But you wouldn't be able to put your loans into forbearance with the National Service Trust, and you wouldn't be able to request to have the interest paid off. You may be able to put your loans into deferment with your lender, but you still have more interest accumulating. Your other option is to opt for a zero value education award. This means you wouldn't receive the education award funds, but you would be able to keep your loans in forbearance with the National Service Trust and have the interest paid off at the end of your term. The important thing to consider in this situation is whether having your loan interest for the year paid off by the National Service Trust to see would that be worth more than the $1,500 end of service stipend. If so, the zero value education award might save you more than the cash stipend. For those of you with private student loans, or for those who select the cash stipend who don't qualify for National Service Forbearance, there is an option you can explore as well. It's generally known as loan deferment. Deferment differs from forbearance in a few ways. First, you can request deferment directly from your lender. Different lenders may use various names for this, so you might need to explore with them first. Basically, you want to request that they temporarily defer your payments due to economic hardship created by your low income during your year of service. Secondly, not all lenders offer loan deferment, and if you find that your lender doesn't, you'll want to explore options to lower your monthly payments. The third difference between loan deferment and forbearance is that deferment may not offer an option to pay off the interest that accrues while the loan is in deferment. For federally subsidized loans, accrued interest may be paid by the Department of Education if the loan is deferred. Check with your lender for specifics, and remember, like forbearance, deferment is not guaranteed. Now let's transition to loan repayment. Once you're no longer able to postpone your loans during service, there are several options to repay and reduce your payments. Right now, we're going to talk about these options separately, and then later on in the presentation, we're going to go ahead and talk about ways you can combine some of these options to get the most out of your benefits. Loan consolidation is a process that allows you to combine one or more federal student loans into one new loan. As a result of consolidation, you will have to make only one payment each month on all your federal loans, and the amount of time you have to repay your loan could be extended. Some benefits of loan consolidation include lowered monthly payments, centralized payments, potential for better interest rates, and access to alternative repayment plans. You can apply for a direct consolidation loan through studentloans.gov. The process also offers both electronic and paper options. Private education loans are not eligible for federal direct consolidation. Since most private education loans do not compete on price, a private consolidation loan is merely replacing one or more private education loans with another. The main benefit of consolidation is obtaining a single monthly payment. Since consolidation resets the term of the loan, this may reduce the monthly payment at a cost, of course, which may increase the total interest paid over the lifetime of the loan. For more information on private loan consolidation, visit the link we've placed in the chat window. For those with federal direct loans, you may want to consider some of the different income-driven repayment options that are available through the government. Essentially, an income-driven repayment plan adjusts your monthly loan payment as a fixed percentage of your income and family size. To qualify for an income-driven repayment plan, you need to have some degree of financial hardship, meaning the balance on your loans needs to represent a significant portion of your annual income. Basically, they want to make sure that payments are about 10 to 20% of your annual income, which would be less than a standard repayment plan. You can enroll in an income-driven plan at any time, and your payment will only go up once your income does. If you enroll right now while you're in service, the payments under an income-driven plan could be as low as $0 or $5 since vistas live at poverty level. The upside to an income-driven plan is that your monthly payments are lower, often much lower. Another benefit is that these payment plans are set up to forgive the balance of your loan after 20 to 25 years, depending on which program you are eligible for. However, remember, one limit to be aware of is that if you stretch out the time over which you are going to repay the loan, more interest will accrue, and you might end up paying back more in the interest in the long run. There are 3 income-driven repayment plans offered through federal student aid. First, you have the Income-Based Repayment Plan, which is known as IBR, Pay-As-You-Earn Repayment Plan, and Income Contingent Repayment Plan, which is also known as ICR. The differences between the plans lie in the year in which you took out your student loans, as well as your annual income and household size. There is a detailed chart found on studentloans.gov, and we will drop a link in the chat box for you to see. To apply, you must submit an application called the Income-Driven Repayment Plan Request. You can submit this application online at studentloans.gov or on a paper form, which you can obtain from your loan servicer. If you selected the Education Award, once your year of service is complete, you can begin using your Education Award to make payments on any federal student loans. You start the process of using your Education Award through the myAmericorps.gov portal. Once you have completed your term of service, you will be able to access a link from your home screen to create an Education Award payment request. You will have access to a form where you will enter the payment type, the amount authorized, and then the institution where the payment will be directed. When you click on Submit, a notice will be sent electronically to your educational or loan institution. A record of your request will appear in your account homepage. The school of the loan holder will complete their portion of the form and return it electronically to CNCS. They will fill in the amount for which you're eligible if the request is for current educational expenses, or they will provide the payoff amount and the loan type if the request is for student loan. Once you initiate this request, a payment generally takes place within 48 hours. Note, this process cannot be automated, so you will have to create a request for each payment that you wish to make. If for some reason the institution denies the request for payment, they should have entered comments or explanation for the reason of the denial. Anytime you use the Education Award, you will need to remember that it will be taxed. So now we're going to go ahead and pause and check in about tax liability. Molly, can you start us off?
Great. Thank you so much, Siobhan. So our next topic is usually one that raises a lot of questions, taxes. As you all know, the Education Award and any interest payments made on your behalf during your service is all considered taxable income. And I'm really sorry that I might be the bearer of this frustrating news, but unfortunately, that's just the way the system works. So we're here to help guide you to make good decisions as you use your Education Award. So as we move through this next section of the webinar, please remember that we're approaching the topic of taxes as it specifically relates to your Ed Award, and we won't be able to address questions about taxes in general. Our next speaker, Taryn, is an expert on the topic of taxes and also in VISTA service. Remember that Taryn served both as a VISTA and an NCCC member. She currently works at the Pennsylvania State Office as a program member and volunteers a lot in her free time. So Taryn, welcome to the webinar. What can you tell us about taxes?
Thanks, Molly. Hi, everyone. I'm happy to be a part of this call today to talk about everyone's favorite topic, taxes. But having used both of my Education Awards to pay off some student loans, along with helping to prepare taxes as a VITA volunteer, I think that this information is important to understand, as well as to be better prepared to use your Education Award and to pay the pertinent taxes. The first big piece of information to take away is that any use of the Education Award is considered income that is taxable. You will be taxed on the amount that it was used for the tax year that it was used. This does mean, though, that if a year goes by and you do not use any of your Education Award, you will not have to pay taxes on it. Your Education Award is only taxed as you use it. In a given year, if you use less than $600, you will need to report it on your tax return. If you use more than $600, a 1099 miscellaneous form posts to your myAmericorps account by January 31st each year for you to include with your tax return. As Siobhan mentioned earlier, interest accrual payments are also considered taxable income and will need to be reported during the year you receive those payments. If your interest accrual payments were over $600, you should expect to have a 1099 miscellaneous form that is automatically generated. Let's pause for a moment and consider tax liability. VISTAs tend to have a lot of questions about tax liability. We understand that folks would like a specific estimate for their tax liability when using the Education Award, so we'd like to clarify why it's not possible to give a standard universal estimate. This is because your tax liability depends on several personal and situational factors. What we can show you is a list of those primary factors that impact tax liability so you can make your own estimate. As a general rule, your tax liability will always be tied to your income during a given year. The Education Award is considered income, so when you use it, it will be added to whatever your annual income is for that year. For a given year that you use all or part of your Education Award, what you owe in taxes will be dependent on the 5 factors listed here. Your total annual income plus the amount of Education Award you use, along with tax credits and deductions based on your own personal circumstances, gets you to your total taxable income. That total taxable amount then gets taxed at the federal tax rate and then taxed at the state tax rate of where you earn the income in. These are just the most basic factors, but as you can see, there are many unknown variables going on. Let's take a look at how this might play out in some hypothetical examples. Let's start with a few scenarios for a hypothetical VISTA who just finished service in 2014. And let's say this VISTA had $10,000 of income in 2014, and for 2014 in one version of the scenario, they used a part of their Education Award, or $500. And then in the other version, in the second column, they used the entire award, $5,730. In both cases, they have about $8,000 in credits and deductions, but as you can see, the added income from using the entire Education Award increases the overall taxable income. Even though the taxable income has increased, the member is still at the 10% federal tax rate. Again, a VISTA using his or her Ed Award directly after service could have a similar situation in that the annual income is low, in this case $10,000, and using a portion of the Ed Award versus using all of the Ed Award results in being taxed in the lower tax bracket. Let's take a look at what could happen a few years later. In another scenario to consider, say it's been a few years after service, and this VISTA is now making $40,000 at a job where they are still paying taxes throughout the year. They then decide to use their entire Education Award that year, so the full $5,730, which is added to their taxable income for that year. The total income is now $45,730, and after subtracting credits and deductions from that, you can see that the taxable income of $37,730 has brought the VISTA into a higher tax bracket, so more taxes to pay. It depends on your own personal situations to decide when you want to use the Education Award, having lower income versus higher income, and using part of the Education Award or using the full amount. As you can see, taxes are complicated and very personal. One way to estimate your own tax liability is to download a recent 1040 form and estimate filling it out with the most recent tax rates in your own estimated information for the coming year. When making a decision about using your Education Award, we suggest you first test this out to plan for your tax liability. The 1040 form comes with instructions, and the IRS.gov website also has resources to get you started. And talking about resources, here's a slide on resources. When it comes time to filling out your tax return, there are lots of different programs available online and in person that can help. For those with an income less than $53,000, you can receive free in-person tax prep through VITA, Volunteer Income Tax Assistance. I personally have been a VITA volunteer for 10 years, and I highly encourage visitors to look it up and to use VITA in your area. Often the organizations that run VITA tax prep sites also can assist you with resources, with resource sharing and making sure your tax questions get answered. If you don't have any questions but want a quick and efficient way to file your taxes, Free File is a great online option to consider. Essentially, many well-known tax preparers like TurboTax and H&R Block have free versions of their software available for those with household income less than $60,000. If you visit the Free File page on the IRS website, you'll see these providers as well as many other approved Free File services. When it's time to file your return, you simply choose a Free File service provider, download their software, and it will walk you through your filing process. At the end, you're able to submit your return to the IRS. Again, Free File services are available for those with a household income of $60,000 or less, and we'll drop a link in the chat to the different programs. If you do have lots of questions about your taxes, we suggest you connect directly with someone from the IRS or a tax professional. We realize that this is an important topic for VISTAs, but please be aware that we are not able to give you personal tax advice. To walk through your specific scenarios, you need to speak to someone at the IRS. While it may sound daunting to do, there are several ways you can contact the IRS and ask your tax questions. The IRS.gov website has a Help and Resources section, and there are a number of FAQs to get you started. If you want to speak with someone directly, whether in person or on the phone, there is a link to find a local IRS office or a taxpayer assistance center in their Contact Us section. You can also call to make an appointment or speak with someone over the phone. Of course, the resources we mentioned are specific to federal taxes. If you have questions also about your state taxes, my best advice is to look up your state's Department of Revenue and contact them directly. And I'd like to now turn it back to Siobhan.
Thank you so much, Taryn. That was definitely very helpful, and I hope that many people were able to get some pointers from that. So let's go ahead and talk about some important information, just looking ahead towards the future and the possibility of eliminating student loan balance. To start, take a moment to think about your future career goals. Let's see, are many of you all interested in a public sector career? If so, please share what types of public sector careers interest you. You may enter your ideas into the chat box and make sure you send to all participants.
Yeah, and those public sector careers can be through a variety of options. Some are coming in already. We've got nonprofit management, city or federal government, service coordinator, grant writing, social work, registered dietitian, more social work coming in, more nonprofit, some government. We've got National Park Service. And wow, someone has already signed up to work with the FDA after her VISTA year, which is fantastic. Also great to see we've got some going into tribal government, Department of Interior, educational, nonprofit management, Veterans Bureau. So we've got a lot coming in. So go ahead and share your responses if you haven't already. We've got an AODA counselor, public health, State Department, university teaching, nonprofit sector, etc. So, Siobhan, it does seem like we've got quite a few participants interested in some public sector careers.
That's excellent. Well, there's definitely multiple federal programs that go above and beyond what the VISTA program offers. So when used in concert with our benefit, it helps to maximize the value of your education awards. We're going to talk about Public Service Loan Forgiveness, and that is a program that encourages graduates to choose a career in public service. It applies only to federal direct loans, so if you have Parent Plus loans or Perkins loans, you may want to consider consolidating them to take advantage of PSLF. If you consolidate, please keep in mind that only payments that you make on the new direct consolidation loan will count towards the PSLF. If you make 120 on-time full monthly payments while employed by a qualifying public service organization, the remaining balance of your federal loans are forgiven. Only payments since October 1st, 2007 count because that's when the PSLF program first started. The balance forgiven is not considered taxable income. The employment and loan payments don't need to be consecutive, so you could work in the public service for a few years, then take a corporate job, and then go back to nonprofit work. Only the payments made during your time in public service employment count towards the 120, but this gives flexibility in how your career proceeds. So let's go ahead and take a quick look at what types of employers qualify as public service loan or public service employment. To begin, in order to qualify, it does need to be full-time employment. Public service employers include any local, state, or federal government organization, nonprofit organizations, as long as they are not partisan, political organizations, or labor unions, public schools, libraries, and related organizations. Some more examples of public service employment that qualify includes emergency management, military service, public safety, as well as law enforcement services, public health services, public interest law services, early childhood education, public service for individuals with disabilities, and the elderly. To apply for PSLF, you will need to document your qualifying public service employment as you go. So each year, or at least each time you change jobs, you will need to complete the PSLF employment certification form, have your employer verify it, and then submit the form to Fed Loan Servicing, which is part of the Department of Education that manages PSLF. Fed Loan Servicing will review your employment certification and let you know whether it qualifies, if information is missing, or if they need additional documentation. They will also let you know how many qualifying payments you have made. Just an FYI for currently serving VISTAs and VISTA alums who would like to document their VISTA service term as qualifying public service employment, please submit the PSLF form to the VMSU via the National Service Hotline fax. Once received, the VMSU will certify the employer section of the form based on your VISTA term information and return the forms back to you to submit to Fed Loan Servicing for processing. After making your 120th qualifying payment, you can submit the PSLF application form to request forgiveness of the balance on your direct loans. More information can be found online, and that website will be given to you. We'll include the link in the resources we share after this session. So now I'm going to turn things over to Calvin, and he's going to discuss how he's personally made the most of the programs to reduce student loan burden. Calvin?
Hi, thanks, Siobhan. Hello, everyone. I just wanted to get on and share sort of some personal experience and kind of speak to my own situation in hopes that maybe it'll shed some light on the entire process and how I've been able to combine the income-based repayment, the public service loan forgiveness, the education award, and forbearance, and all of that. So I personally use public service loan forgiveness and income-based repayment to manage my student loan debt. I have about $24,000 in student loan debt, and before taking advantage of income-based repayment, my payments were about $250 a month. I served for 2 years with AmeriCorps, during which my loans were in a period of forbearance. After my 2 years of service, the salary at my first job was about $30,000. Using income-based repayment, I was able to get my payments down to a manageable $100 a month. As my salary has increased a little bit since then, My payments have gone up slightly, but with public service loan forgiveness, I will still end up paying significantly less than the full $24,000 over the course of my 10 years or 120 payments. From my time serving in AmeriCorps, I was able to claim 12 months of credit towards public service loan forgiveness. I'm going to say PSLF from here on out because that's a lot of words to say. PSLF using my education award. And in my current career working for the Corporation for National Community Service, I'm working to have my loans forgiven in the next few years. So while serving, I took advantage of the National Service Forbearance and the interest payments to reduce the burden of living on a fixed stipend. However, if I would have known better or had all of the information that I have now, I might have done things a little differently. First of all, I wouldn't have put my loans into forbearance, and I would have applied for income-based repayment during my service year so that I could get credit towards my 120 payments while paying virtually nothing. Because VISTA members, as mentioned, because VISTA members live at poverty level, under income-based repayment, your payments can be as low as $0 or $5. So I definitely would have done that had I known, beforehand. I wouldn't have gone into a period of forbearance, and I would have just paid them. So what that means is, because my loans were not in an active status of repayment and I was not making payments, I can't get credit for my actual service, but I was able to claim 12 credits using my education award. What I've learned is that the distinction between earning public service loan forgiveness credits from paying out of your pocket each month and earning credits by using your education award are very different. The distinction is very important because you can only receive a maximum of 12 public service loan forgiveness credits from payment using the education award, even if you make over 12 payments. This is something that is a little tricky, so I'll try to repeat in a different way. If you use your education award to make payments on your student loans, you can only receive 12 public service loan forgiveness credits. You can make 24 payments using the education award, and they will still only give you credit for 12. So no matter the amount of payments that you make with your education award, you can only receive 12 credits. But if during my service, if I had been paying on my loans for both years, I could have received 24 payment credits for those 2 years, plus an additional 12 from using my education award for a total of 36 credits, instead of just the 12 that I was able to receive by using my education award. So by using all the resources available to me, I feel like I have a pretty comfortable relationship with my student loan debt, and I really feel confident in my ability to pay it off with the least amount of financial burden. So thanks, Siobhan, for letting me speak for a moment, but I'm going to turn it back to you for information about Perkins loans.
Thanks so much, Calvin. For those of you with with Perkins loans, I'd like to point out some of the unique characteristics of these loans as they relate to the education award and loan forbearance. Perkins loans are not eligible for IDR or PSLF. However, for each year of VISTA service you complete, you can get 15% of your Perkins loans forgiven. To be worthwhile, your Perkins loan balance would need to be at least $37,000. If that's the case, here's what you would do. You would select the cash stipend as your end-of-year benefit. Just FYI, you can't get the Ed Award and the 15% loan forgiveness. It's one or the other. You'd put your loan in deferment based on financial hardship. At the successful completion of your VISTA term, 15% of your Perkins loan balance is forgiven, and the Department of Education will pay off the interest that accumulated while your loan was in deferment. To learn more details about options for VISTAs who have Perkins loans, this is a link that will be posted in the chat window. So we've covered a lot of different programs and options for you all to consider. To wrap up, we're going to go over some recommendations for making the most of your benefits. For those with federally backed loans, here are some thoughts on how to get the most out of what is available. So while serving, you can apply for income-driven repayment, which is IDR, and get your payments down to almost nothing. This is a great option if you know that you want to participate in the PSLF program and want to gain credit towards your 120 payments without actually having to pay anything. Applying for forbearance while in service is another great option to put your payments on hold and have the accrued interest taken care of at the end of your service. If you are earning a cash stipend, ask your lender about other programs that they may have to help you manage your student loans. Consider a zero-value education award for future terms of service if you have already reached your maximum amount of education award funds. This lets you have the forbearance benefits that come with the education award while maintaining our 2 education award maximum. No matter what the decisions in service, these benefits extend well into your life after VISTA. When your service is over, keep making IDR payments in order to receive credit toward your PSLF. Using your education award to make payments is a great way to help transition out of VISTA service and into permanent employment. Payments from the education award must be done manually each month. Please remember this. Although you can make as many payments as you would like from your education award, you can only receive a maximum of 12 PSLF credits total using the education award. When your 120 monthly payments have been made, you will be able to apply for loan forgiveness. The PSLF program started in 2007, so the earliest that anyone could receive the benefit of forgiveness would be 2017. Here are some immediate next steps we recommend you want to take as a follow-up to this session. First off, know what type of loans that you have. Take a look at the Education Award website. You want to check with your lender if you haven't already placed your loans in forbearance or deferment. Next, explore the income-based repayment plan and public service loan forgiveness program. Also, make sure your lender is listed on our website. Here are some of the resources that we shared during this session. We have our website, which is myamericorps.gov. You're going to submit forbearance, interest accrual, and associate payment requests. We have studentloans.gov, which is a great website for all things related to student loans. The IRS.gov website for guidance and assistance on tax-related topics. MyFedLoan.org, which is a website that you go for assistance with PSLF processing and verification. We have the National Service Hotline, which you can connect with the VMSU as well in order to, submit paper requests for forbearance, interest requests, or any benefit-related questions.
Wow. Well, thank you so much, Siobhan, Calvin, and Taryn. We covered a lot of information, and I know that there's a lot of questions out there. Calvin has been very busy in the Q&A panel. But before we get to the Q&A section of the webinar, we really want to know what you guys thought. So on the right side of your screen, the poll just popped up where you can share feedback about this webinar. Please take a moment to answer the questions right there. It just takes a couple seconds because we do review your responses and we like to use this information to help us improve webinars, and your information, your input does help us. So we have given you guys a lot to think about, and now it's time for your questions. Because we have a pretty good audience for this session, we may not be able to get to every question, but we will do our best. We'll focus on questions that will likely be of interest to the other audience members, and again, we might refer you we might avoid questions that get into a lot of personal details, but we'll refer you to the National Service Hotline so you can get an answer tailored to meet your specific situation. You can ask a question using the Q&A panel located on the right side of your screen, as many of you are already doing. But now I'd like to ask our operator, Kim, to come back on the phone and remind us how to ask questions via the phone lines.
Thank you. At this time, if you'd like to ask a question, please press *1, and please record your name when prompted. If you'd like to withdraw the request, you may press *2. Once again, to ask a question, please press *1 and record your name when prompted.
Okay. And while we wait to see if we have any questions coming through via the phone, I'm going to go ahead and have Calvin. work with me on some of the questions that have come into the Q&A panel. So, Calvin, I know you've been pretty busy, but I think that we have some questions that would be good for everyone to hear. So the first one is from Crystal, and she says, I put my loans in deferment, but my loans were federal direct loans through Great Lakes. I got told forbearance is if I had no job, and they considered AmeriCorps a job, but I was able to put them in deferment. Will I be able to get the tax accrued paid off? And I think she means the accrued interest paid off.
Right. So if the interest payment is only going to be for loans that are in National Service Forbearance through AmeriCorps. If you are in deferment with your lender, we don't pay the interest that is accrued on that deferment. We only pay the interest that is accrued while you're in a status of National Service Forbearance with AmeriCorps.
All right. Thank you, Calvin. And here's another question about forbearance. I think this is going to be a popular topic for us. Anthony asks, if our loans are in forbearance during our service year, can we make a retroactive payment using our Ed Award to receive the 12 payments for PSLF? Is that something they would need to do?
Yeah, you actually can, and that's how you get, your 12 credits using your education award. If you're in a period of forbearance, you're not making payments, so you're not earning those credits. But once you're done with your service and you're back into a period of repayment, the way that works is whatever your monthly payment is, you pay that times 12 using your education award, and that's how you get 12 credits. So, for example, if your monthly payment after your service was $100 and you paid $1,200 of your education award towards that, that would count for 12 credits because it's like you're paying 12 months of payment all at one time.
Great. Thank you so much.
Yeah.
All right. So we've got a question from Aaron, and Aaron says, we can't put a loan into forbearance if it's in the grace period. So are we losing out on those interest repayments, or does it not matter because the loan is in the grace period? Seems like if the loan was in the grace period, would they be charging interest? I think that's what she's asking.
Right. I'm honestly not sure. I don't know if you are earning interest while you're in your grace period.
Great.
That might be a lender-specific question.
Yeah.
Okay. All right. All right. Well, we will just keep moving on. So Amanda has a question. If one payment equals one credit, and this is about PSLF, I think, could a person make multiple payments, i.e. using the Ed Award and IDR payments?
Let's see. Person make multiple payments. That's a tricky question. I'm not entirely sure that I understand what the question is asking.
Okay.
Let's see.
Yeah. So she went on to explain in another follow-up making multiple payments in 1 month. So I don't know if it would be double counted.
Right. I'm not sure, honestly. I think that would, again, I think that's a lender-specific question. I think you'd be duplicating effort there. One payment with the, I think one payment is sort of one payment. That's a hard question. I don't know, but I can do some research and get back to Amanda on that.
Okay. Or Amanda could call the VMSU.
Yeah, or you can email us at vmsu@cns.gov, and we'd love to get in touch with you and contact you about that.
Yeah. All right. So let's see. Rebecca has a question. If he had used IBR or IDR while in his year of service instead of forbearance, then would he have not received the interest payment? And that might be a question specifically about your situation, Calvin.
Yeah, definitely. So I would not have received the interest payment because my loans wouldn't have been in a period of forbearance. If they were in that period of forbearance, which they were during both of my service years, I did receive an interest payment for both years. But if I would have been paying, then no, I would not have received that interest payment.
Okay. All right, and a question from Stephanie. Is there anything to do about Perkins loans in terms of deferment, forbearance, and income-driven repayment? So
I would say to contact the university since they are the ones, I guess, handling the Perkins loans to see what options are available. I'm not 100% sure.
Sure. So, Siobhan, it sounds like Stephanie should maybe reach out to the institution.
Yeah,
and
see what options are available.
Okay. All right, great. All right. Amanda says, I was not aware of this, not sure what of this is, but was told before my PSO that I had to declare my choice of the education award or cash stipend. I chose cash because the Ed Award isn't a dent in my loans, and once you choose cash, you can't change. Is there anything I can do about this?
There is not. Once you select the stipend as your end-of-service option, there is no way for us to change that back to the education award. Now, if you select the education award at the beginning of your service, you have the first 10 months of service to change to the stipend. But once that change to the stipend is made, there's no going backwards. And if you're started your service and have been activated with the stipend, there's no way for us to change you to the education award.
Yeah, and hopefully we do deliver that message during the Navigating Your Year of Service session at PSO. Usually VMSU comes on to talk about that, so unfortunately that is part of the presentation. Okay, so let's see. Anthony says, in order to obtain as many payments on my PSLF during my year of service, I should apply for the income-based repayment plan, make payments during my year of service that will likely be close to zero, and do this without using my education award. Sounds like he is looking to see if that might be a good strategy to follow. What do you think, Kelvin?
I think so. I mean, honestly, as I've mentioned in some of the other questions, that's what I would have done if I could do my service over again. I would have stayed in a period of repayment, applied for income base, and got my payments down to as low as I possibly could, and collected all of those payments. That would have been 24 payments towards my public service loan forgiveness. And then at the end of my service, use my education awards to get that additional 12 credits. I mean, I think it's a good strategy, but again, it's going to be kind of what is best for the individual. If you contact your loan holder and the income-based repayment is still, a payment that is not manageable on your VISTA stipend, then maybe you do want to opt for the forbearance to make things a little easier for you. But if it is a payment that you're going to be able to handle, I think it is a good idea, to get that payment down to $0 or $5 or $10, however much it might be, and go ahead and make those payments and get that credit towards your public service loan forgiveness.
Okay. And it looks like Jillian has a question along the same lines. Is it worth it to do the income-based repayment and PSLF if she has loans around $30,000?
100%. It's totally worth it. Anything that's going to get your payments lower and possibly, get it forgiven in 10 years. If you do 10 years of federal service public service, and you're paying $100 a month, what's that? That's like $12,000 maybe. I don't know, am I doing that math correct? Probably not. But I think it is. I did the math for myself personally, and my loans are about $24,000. And over the course of my 10 years that I plan on doing a public service, I'm going to end up paying significantly less than that and be done with them, by the time I'm like 32, which is going to be great.
Yeah, that will be great, Kelvin. Good job.
Thanks.
And let's see, so Marissa has a question. Again, I think about the speaking role that you had it was stated by one of our speakers that he would not have put his loans into forbearance and instead started paying off his loans through PSLF. Does this mean if we put our loans into forbearance, we can't start making payments on them?
That's correct. I mean, that's what a period of forbearance is. It's a period of time where you don't have to make payments. That's like the entire point of forbearance is that you're not making payments on them. If you do want to make payments, you have to get out of that period of forbearance, and enter a status of repayment.
Okay. And Jaleesa would like to know more about a statement you made. She was under the impression that any amount forgiven through PSLF was indeed taxable income in the year that you apply after your 120 payments. Do you have any more information on that, Calvin, or where they could go for more details on that topic?
So as I was answering questions, I actually looked up something about income-based repayment, and under income-based repayment, that is a correct statement. I think I don't exactly remember where I found it. I'm sure it was on the studentaid.gov website, but it did say that any amount that is forgiven after 25 years is taxable income. I don't know if under public service loan forgiveness if it works the exact same way. I imagine that it might, but that's going to be some more in-depth research that we're going to have to do to kind of figure out that answer. But again, all of that information is going to be on the Federal Student Aid website, under income-based repayment, and it kind of gives you all of the stipulations and all of the contingencies involved with applying for income-based repayment and doing public service loan forgiveness.
Okay, great. And I'm just going to take a break from our online questions and check in with our operator to see if we have any questions on the phone.
I show no question. Again, as a reminder, if you'd like to ask a question, please press *1.
Great, thank you. Okay. Samti has a question. Where is the lender list on the website? Is there a more specific URL instead of just my.americorps.gov that Samti can go to?
Yeah, definitely. If you go to edaward.gov, and then on the right-hand side, there's a link that says school, and it's got all kinds of stuff. And I'll go ahead and I will drop that into the chat box right now. I just found it. So there you go. That's in the chat box. If you go there, it'll tell you about matching institutions, schools, that accept the Education Award, Title IV schools, and trade schools. So that's all of that's going to be the best resource for figuring out which institutions will accept the Education Award.
Right. And Taryn, we have a tax question, so I'm going to refer this question from Dylan to you. And Dylan says, tax-wise, would it be better to use the Education Award to pay in monthly installments or all at once at the end?
Well, that is a good question, and I think it depends on a lot of things. So I feel like I can't give good advice on it besides I guess if you're breaking it in between 2 tax years, that could be one thing, because then it would be income counted toward one tax year versus another. Whereas if you do one lump sum, it's obviously going to be in one tax year. So I don't think I could really give a good answer to that.
If I may kind of go back to what you said, go back to what you said in your presentation. Let's say, you start your VISTA year in January and you end in December. That's, one full tax year. And let's say, so in December you use all of your Education Award, so you've made $12,000 roughly from your VISTA year, plus the additional $5,000. That's going to put you in about, $17,000 worth of income. Minus your credits and deductions, that's going to keep you in a really low tax bracket. If you decide to, take a job and you're making $40,000 a year, and then you use your entire Education Award that year, your taxable income goes up to $45,000, and that may put you in a different tax bracket and have some different tax implications. I think it also goes back to what Taryn was saying about how tax questions are very tricky because they're very personal, and there's so many factors involved, with those decisions that you decide to make.
Mm-hmm. That's right, Calvin, and good advice from the both of you. Let's see. So Linda would like to know, when using the Ed Award to pay loans after service, can we specify what we want the money to go towards? For example, can we pay a large lump sum towards the borrowed sum, i.e. not towards the interest, versus just paying a monthly payment?
Right, and that's going to be where you're going to have to be really proactive on your end at getting in contact and staying in communication with your lender. You know, calling them and saying, hey, I'm sending over this $5,000 from my education award that I earned. I'd like it to go towards, you know, my principal and not the interest that is accrued. Is that something that can happen? You know, and they'll let you know, yes, we can allocate, you know, this payment to go towards this, or no, we can't do that, and it's going to go towards this. That's where you kind of have to advocate on behalf of yourself, you know, to your lender and say, hey, these are my intentions. This is what I want to happen. Can you make this happen?
Mm-hmm. All right. Thanks, Calvin. And Kim, do we have any questions on the phone yet?
I show no questions. And once again, as a reminder, if you'd like to ask a question, please press *1.
Yeah. All right. We'll keep cruising through questions online because they keep coming in. You guys have been really great, so thank you for your questions. Let's see. So Devaney says, if I've chosen the cash stipend option, will I still have my interest paid? Calvin, what do you think?
You will not, because you weren't in a period of forbearance because you didn't elect the education award. So if you elect the education award, you can put your loans into forbearance, and the forbearance is kind of that's the key to getting your interest paid. You have to be in a period of forbearance through AmeriCorps in order for us to make an interest payment. If you choose the cash stipend, you can't request the forbearance, so you can't get the interest payment.
Mm-hmm. All right. And let's see. Connor says, I have a Perkins loan that is way less than $37,000. Is it better to put it in forbearance or deferment?
Ooh. I don't know the answer to that question.
Sounds like it might be a personal preference for the most part and may depend on some other circumstances.
I think so.
Yeah.
I think so, yeah.
Okay. Well, Betsy has a question about deferment. Is there no way to go back from deferment? Is there a way to stop her deferment period?
Yeah, I mean, I think you should call your lender, and if you want to get out of a deferment period and maybe go into National Service Forbearance, I would call and say, hey, you know, I want to take myself out of deferment so that I can apply this National Service Forbearance, you know, that I'm working, and, you know, and that is a benefit of my service. You know, you should be able to cancel your period of deferment at any point you wish. You just have to communicate that with your lender.
Okay. And does the same hold true for forbearance?
For the National Service Forbearance, you can get out of that forbearance at any point you wish. So if you're currently receiving the forbearance and after this session you're saying, oh man, maybe I should go into a period of repayment and apply for the income base so I can get my payments down, you can cancel your forbearance. Contact your lender, say, hey, I'd like to come out of this status of forbearance and start making payments.
Mm-hmm. All right.
Can I just add something too? Yeah, when I was a Vista and I had my loans in deferment, towards the end of my service, I decided to consolidate my loans, and that took me out of my deferment. I had to start payments. So if you do decide to consolidate during your term, it might take you out of whatever forbearance deferment period you're in.
Good advice, Taryn. Thank you for sharing that.
Yeah.
All right. Let's see. So Alexis would like to know, when should you fill out the paperwork for the Public Service Loan Forgiveness? Can you do that after your service, and is that when you receive the full credit?
Yeah, definitely. So if you are in the middle of your service and you send the VMSU your employment verification, we can only verify you up to the date that you send it because we don't know if you're going to finish your service or not. You know, we can't say that, yes, this person completed a full term without you actually completing that full term. So the best time to do that paperwork is probably after your service, and then submit your employment verification to us here at the VMSU, and we can get that done for you. It is retroactive, so any payments any payments that you've made while being employed in public service since 2007 can count towards your public service loan forgiveness. I just want to bring that back up. So if you've been working in public service since 2007 and you've made payments on your loans at any point, you know, in that time, you are able to retroactively count those as payments towards your 120.
Great. All right, so Calvin, we got another question for you in your scenario that you shared. Zach says, it sounds like the ultimatum is forbearance and interest accrual versus income-driven or income-based repayments. He'd like some advice on some things to consider, or maybe an example of how much he might be able to save depending on the different scenarios. So Kelvin, you talked about this, but how did you ultimately make up your mind on which scenario you were going to follow?
So when I originally started my service, I knew that I wasn't going to be able to afford full payments, on my loans. I wasn't incredibly well versed in the Education Award and in the National Service Forbearance and income-based repayment. I didn't know as much about that stuff as I do now. Some advice on things to consider. Is I would consider, how long do you want to be paying off your loans? How much do you estimate or think that your payments are going to be, once you're done with your service and have, maybe a better paying job, a better paying position. Think about how much your payments are going to be over the next 10 years, next 10, 25 years if you just do income-driven repayment and don't do public service loan forgiveness. That's hard, but I really do like the way that he put that is the ultimatum. It's, you either can elect the Education Award and get the interest accrual payment, and get the, and request the National Service Forbearance, or you just make payments, throughout your year and get your end-of-service stipend. Those are kind of the two options that you have to weigh. If it's going to be more valuable for you to have that $1,500 at the end of your service, then that's the option I would go with. But at the end of the day, it's all personal finances, what you're comfortable paying, kind of future planning, and what you, and kind of what your goals are. My goals are to get my student loan debt to get eliminated as soon as I possibly can. So that's why I'm doing a public service loan forgiveness and income-based repayment and all that stuff.
And Calvin, how many years do they have to use the Ed Award? Can you remind us on that?
Yeah, so you have 7 years to use the Education Award from the date that you finish your service. So 7 years after your last day of service, your Education Award is available for you to use. Right,
and we're going to have a webinar on using the Ed Award in January, so there'll be many more details to follow on strategies around that. Taryn, we have a question from Emily about taxes and VITA sites. Emily would like to know if the people at VITA will have information about our taxes and paying off loans so that they could answer questions specific to their individual situations.
Good question. The people at VITA will have resources to paying taxes, but they won't be able, well, I mean, it depends on their experience, I guess, but they won't probably have all the information on paying student loans specifically, but they'll have information about if you do pay student loan interest and how that can be a deduction on your taxes. But for the most part, VITA volunteers and the type of resources that VITA sites provide is more focused on your taxes. So I don't know if it would be a good resource for how to pay off your student loans, but I feel like Calvin mentioned a couple times that there are different resources and websites that are related to student loans out there, maybe specific to your student loan, might have some resources that will help you pay that off, but VITA is more focused on paying taxes.
And Taryn, if someone does end up going to a VITA site for assistance, how should they prepare for that meeting, or what should they take with them?
Well, if they prepare to get their taxes done, a lot of VITA sites will ask you to show, a photo ID plus your Social Security card and then all your tax forms. And then if you have questions, to kind of have them outlined out so that while they're asking you questions about your taxes, you can kind of have a conversation about other taxes you might have, because, like I said, oftentimes those sites have resources to other information, to other providers that they can point you in that right direction.
Okay, great. Thanks, Taryn.
Yeah.
And Kim, I'll check back in with you and see if we have anyone on the phone that would like to ask us a question.
Thank you. We do have a question from Rebecca Miller. Your line is open.
Hello. I just wanted a little bit more clarification if I could. I'm in my second year, so I can take my loan out of forbearance and do the 12 months that I could have for my income-based repayment. But it would depend, I would think, on how much interest I'm accruing this year. Is that correct, that would save me money?
I think the saving money portion comes for me and my personal situation. The saving money portion comes at the end once I reach my 120 payments and the rest of my loans are forgiven. I'm not sure if it's like so immediate, that that you would see the benefit from that. I mean, because if you're making payments and they're $5, obviously, I mean, you're making $5 payments. That's not much money, but you're not saving anything. So for me, definitely the savings come at the end, even if the interest is still accruing while I'm repaying. At the end of that 10 years, it's all going to go away, so I'm only going to pay the amount. I'm trying to think of how to explain that. So even if the amount of my loans grows because of interest that is accrued over my service year, at the end of 10 years, I'm only going to pay what I was going to pay for that 10 years and nothing more.
Okay, so if I was going to try and figure out the math for myself in my situation, you started saying that it would be the monthly payment that I would be paying for the extra year or two. Is that correct?
In regards to using the Education Award to get credits?
Right, like this year my loan was in forbearance, and so I got the amount of interest accrued paid off, and so that was an amount of money. But in the end, you're saying I will have a year or two of payments, so 12 or 24 payments, that I may have been able to count instead. So if I paid $100 a month, like your example used, that would be $1,200 for that last year, and then $1,200 maybe for the other year if I could get the 2 years of, credit, the 12 credits or whatever you're saying. So really that's $2,400 in payments that would save me in the end, as opposed to how much interest I got paid toward my loan amount.
Yeah, definitely, and that's a great thing to consider is how much is your interest payment and how much, would your normal monthly payment be? If the amount of the interest payment is more than what you would have paid over that year, then that might be the better benefit for you, But if that interest payment is only $500 and you would have, ended up paying $1,200 in payments, then using the Education Award, to pay that $1,200 might be the best use of those funds.
Okay. All right. So that makes more sense to me then, because I don't know how much my payment might be in the end. If I can take off a year now, or if I could have taken off my 12 credits for the previous year. Is there a way for me to find out how much my payment would be on the loans that I have currently?
Yeah, call your lender and ask them, say, hey, I want to apply for income-based repayment, or if you don't, you can ask them, how much is one of my normal loan payments? Like, how much would a normal loan payment for me be? And then express to them your intention. Say, hey, I have this Education Award. I'm looking to, pay for 12 months using my Education Award so I can get this credit. And they can definitely guide you through that, and they'll be able to tell you, the exact amount that you're going to need to pay using your Education Award in order to get those 12 credits.
Great. Okay. And so hopefully, in theory, that will be more money than what interest was paid over the 1 year.
Yeah, definitely, yeah, so that you're getting the most amount of benefit.
Great.
Gotcha.
Thank you so much for talking through that, Calvin. I think that was helpful to everyone.
Thank you.
We are getting near to the wrap-up time, and There's one question I want to ask Taryn on taxes, and then I think we're going to just talk really briefly about PSLF because there's a lot of questions coming in on that. So, Taryn, the question about taxes is, where can someone locate information about tax brackets? That information is typically publicized and set in stone each year, right?
It's funny you ask. I was looking for that information when coming up with some notes for this presentation, and there's a link in the question and answer, I think, for a website that's irs.com, and it does have some information there. The irs.gov website seems to be tricky at just posting what the tax brackets are. I don't know why, but I know when I do taxes for people, I use a software program that kind of automatically does it for me, so I'm not, I can't roll them off the top of my head where the brackets list or how the brackets line up. But I will say if someone does contact the irs.gov and speaks to someone, they can get a better answer and a more confirmed answer. But there's lots of websites that if you just type in 2015 tax brackets, there's a lot of information out there. I don't know if it's 100% accurate, but it's probably close to it. But again, I like to direct people back to the irs.gov and to talk to someone specifically there. And they do have those taxpayer sites that will answer questions like that.
Great. Thank you, Taryn. Makes sense, irs.gov, since they deal with so many tax issues. All right, so Kelvin, we still have some questions that we didn't get to, but the main topic is PSLF, Public Service Loan Forgiveness, as well as income-based repayments and federal loan consolidation. So in the next 30 seconds, what's your best resource for people to go to with questions on those topics?
So I think that the best resource is going to be the Department of Education website. They are incredible. They, literally all of the information is there. When someone calls to the VMSU and they have a question for me, if I don't know the answer, that's where I go to look and search for things. Their search features are very powerful. You just type anything in and you can find whatever you're looking for. Also, the Education Award, go to edaward.gov. That is also a great resource for questions regarding the Education Award specifically. If you want to call the VMSU, you can call the National Service Hotline and ask them questions. You can send emails to vmsu@cns.gov, and someone will get back to you, with answers to your questions. Honestly, your best friend in answering any of these questions is going to be the Internet and Google, because that's how I find all my answers. I don't really, none of this comes naturally. No one just knows all this stuff. You really have to do your research. And kind of dig in deep and find your answers there, because all the information is there.
Great. Well, thank you so much. And I have to disagree with you because I think this does come naturally to all of our presenters, since you guys have done such a great job of working through a really heavy topic and one that's really important. So a virtual round of applause to Siobhan, Kelvin, and Taryn. And thank you all again for attending this webinar today. And we hope you can join us for our next one, which will be on organizational partnerships and collaboration, Better Together. That is scheduled for October 28th at 2 p.m. Eastern. And remember that we do have another partner webinar coming up about the Education Award in mid-January. And if you want to refer back to this webinar, remember that within the next few weeks, it will go up on the Vista campus, and you can access a recorded version of the webinar. You can listen to all the Q&A, and you can also get access to the resources that were shared as well. So thank you so much to our presenters and our esteemed guests, and I hope everyone has a great day, and thank you so much for your service.